I think I keep it very simple. Do you understand the business, Rohit?
Yeah.
Because if you don't understand the business, you not know why are you entering and why you're exiting. So understanding the business. Of course, like any other fund managers and analysts, right? We look at businesses in the past, how they have performed, the cyclicality, how the management has behaved in difficult time, how have they, done good or bad with the minority shareholders. I think that's a common part. We all as investors are supposed to do that, right? For me, what is important is why am I buying a stock today? I'm buying it for the next 2, 3 years business performance. And if I get that right, how the stock price will move and my NAV will grow, right? That's how I'm looking at it. So for me, and I'll give you with an example, right? I mean, when you look at the stock and you say last 5 years was great for the stock, everything went well, they did great, they outgrew their peers, the management is super, right? And the stock price was also doing well. Is that enough for me to buy the stock today? Yes, it is one of the inputs, right? But going forward for the next 2, 3, 4 years, what happened in the last 5 years, whether in that particular sector, industry, or the moat the company was enjoying, can that continue over the next few years? That's very important to understand. Why I'm saying so is, suddenly there was no competition last 4 years. You were just a 1 or 2 player market. You're the biggest player, right? Demand was growing strong. So you benefited out of that also. Going forward, is the competition rising, or is someone launching new products or the demand for that product is coming down? So you have to take that cue also, right? And same thing goes if you were doing bad for last 5 years. That doesn't mean in the next 3, 4 years you're going to do bad, right? If things change, you have to look at it in a different lens. That's the first part. Secondly, what are you paying for? Like I always say, right? You're buying a stock today, you want the price to go up. If you're already paying today for the next 2, 3 years, good performance of the business, is it going to help me? It's good to say I have a good company in my portfolio. But if the stock price is not moving up, is it a good company for my returns? It is not. I think these two aspects, the continuity or the change in the business environment in the last few years versus expectation, and what price are you paying it today? I think that holds the key for me.